Welcome to another REG walkthrough video. I'm Logan, and in today's video, we're going to be going over the S Corporation Accumulated Adjustments Account, or the AAA. And we're going to be doing that the SuperfastCPA way, which is diving straight into questions to learn the material. If you don't know much about our strategies and you want to learn more, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We go over the key ingredients to passing the CPA exam. Again, it's only 1 hour, it's free, and it will save you so much time struggling with your CPA exams. Make sure you go check it out. The link will be in the description. Also, if you like the idea of going through questions as your main learning material, make sure you check out our SuperfastCPA app, where we not only have audio notes and review notes, but also 5-question mini quizzes that you can easily access on your phone all throughout the day to continue learning. With all that said, let's dive straight into the questions. All right, here is question 1. Oakleaf Corporation has elected S Corporation status at the beginning of the current tax year. This is their first year of operation, so there is no beginning balance in the AAA. During the year, Oakleaf Corporation reported the following: ordinary business income of $200,000, long-term capital gain of $50,000, tax-exempt interest income of $20,000, charitable contributions of $10,000, life insurance premiums for a policy on a key employee for $5,000, and distributions to shareholders of $100,000. Calculate the year-end balance of the Accumulated Adjustments Account, or the AAA, for Oakleaf Corporation. All right, if you don't really know what the AAA is or you don't really understand it, that's okay. That's why we're here. Let's go ahead and go straight into the answer to start learning how this works. Okay, and the answer is $135,000. Let's learn about this. The AAA is designed to keep track of undistributed earnings that have already been taxed to shareholders. This helps ensure that when distributions are made to shareholders, they are not taxed again on these earnings. To calculate the AAA at the end of the first year of operations for Oakleaf Corporation, they start with the $0 balance because it was the first year of operations. You add the ordinary business income, you add the long-term capital gain, you do not add the tax-exempt interest, and we'll talk about that in a little bit. You subtract the non-deductible charitable contributions, so tax-exempt not included, non-deductible is included because, again, with an S corporation, those deductions do flow through to the shareholders. You subtract the non-deductible life insurance premiums, and distributions to shareholders would reduce the AAA if the AAA is positive. Since the AAA before distributions is $235,000 and the distributions are $100,000, the AAA would be reduced by the amount of distributions. Therefore, after accounting for the distributions, you end up with $135,000 in the AAA. And then let's read this last bit here. The distributions to shareholders reduce the AAA, but do not impact the corporation's taxable income or the shareholders' individual tax liabilities, assuming the shareholders have sufficient stock basis to absorb the distribution. The shareholders have already been taxed on their portion of the corporation's income, even if they never actually received any money. All right, so basically, the AAA keeps track of how much money the S corporation has made over the years to make sure that they don't tax it again to the shareholders. Distributions do lower it, and we're going to talk a bit more about distributions in future questions. All right, let's go ahead and go to the next question. All right, here is question 2. During the current year, Cedarwood Enterprises and S Corporation reported the following financial activities: net ordinary business income of $300,000, short-term capital loss of $20,000, dividends from domestic corporations for $15,000, tax-exempt municipal bond interest of $10,000, and distributions to shareholders of $50,000. Assuming Cedarwood Enterprises had no accumulated earnings and profits, or E&P, and that would come into play if they were a C corporation previously, by the way, and a beginning AAA balance of $100,000, determine the AAA at the end of the current year. Okay, we just learned how to do this. You probably could figure out how to do this one just based off of the previous one. So go ahead and pause the video, and when you're ready, come back and we will look at the answer to see if you got it right. Okay, and here is the answer: $375,000. To determine the end of the year AAA balance for Cedarwood Enterprises, add the net increases from business income, capital gains and dividends, and subtract any losses and distributions. So we start with the $100,000. You add the $300,000 from business income, you add the long-term capital gain, you subtract the short-term capital loss, you add the dividends received, and then you subtract the distributions to the shareholders. And that leaves you with a AAA balance of $375,000. Okay, so it's pretty straightforward once you know basically what it is and how it's calculated. We're going to do a couple more questions just to show a couple more situations that happen with this. Let's go to the next question. Okay, here is question 3. Vertex Consulting and S Corporation had the following financial activities during the current year: net ordinary business loss of $50,000, a short-term capital loss of $20,000, long-term capital gain of $10,000, dividends received for $5,000, and non-deductible expenses related to entertainment of $15,000. Assuming Vertex Consulting had a beginning AAA balance of $20,000, determine the AAA at the end of the current year. Okay, so the question here is, can the AAA go negative? We don't know that yet, so let's go ahead and go to the answer to see how this works. Okay, and here is the answer. It's negative $50,000, so it can go negative. Let's learn a little bit about it. To calculate the AAA at the end of the year for Vertex Consulting, we start with the starting AAA balance of $20,000. We subtract the ordinary business loss. We subtract the short-term capital loss. We add the long-term capital gain. We add the dividends received, and then we subtract the non-deductible expenses. Again, don't be tricked by non-deductible. That does still affect AAA, and that gives you the negative $50,000 AAA balance. All right, let's go to the final question for this video. All right, here is question 4. Brighton Solutions and S Corporation had the following financial activities during the current tax year. Net ordinary business income of $100,000, long-term capital loss of $15,000, dividends from domestic corporations $10,000, non-deductible expenses for $5,000, and distributions to shareholders of $120,000. Assuming that they had a $20,000 AAA balance at the beginning, we have to calculate the AAA balance for the end of the year. Okay, so in the previous question, we learned that it can go negative, but that didn't include distributions. Go ahead and pause the video, see if you can figure this out. However, there is a rule with distributions to shareholders and how it can affect the AAA. So when you're ready, come back and we will look at the answer. Okay, and the answer is $0. That's the ending AAA balance. So let's learn a little bit about that. So the starting AAA balance is $20,000, and we do all the normal stuff, and that before distributions leaves you with a $110,000 AAA balance. But when you subtract distributions, they can only take it to 0. And let's read about that. However, AAA cannot go below 0 from distributions. The AAA is reduced to $0, and the excess distribution of $10,000 must be accounted for from other resources, such as reducing shareholders' stock basis or treating it as a dividend from unaccumulated earnings and profits if it was previously a C corporation. Now, we're not going to be going over those things in this video. Just know that distributions to shareholders cannot reduce AAA below 0. It can go below 0 from an ordinary loss, but it cannot be reduced below 0 from distributions to shareholders. Now, that does bring up the question, what happens if the AAA is already negative and shareholders want to take distributions? Again, it's the same thing here where they might be able to take it, but it won't be coming from AAA. It will be coming from stock basis or accumulated earnings and profits if it was a C corporation before, and that's how it works. All right, let's finish out this video by doing one more part of the SuperfastCPA strategy, which is something called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the most important things that come up based off the questions. You'll notice 3 or 4 topics that came up multiple times throughout the questions, and you know that they are important according to your review course, and you need to know them for the CPA exam. So let's go ahead and go over the pillar topics for this video. Okay, and here are the pillar topics. The accumulated adjustments account is essentially to keep track of earnings and profits throughout the years to know what income has already been taxed to shareholders so they are not taxed again. Things that increase AAA would be ordinary business income and separately stated items, basically everything that increases income except for, of course, tax-exempt income. We'll talk about that in a second. Things that decrease AAA would be ordinary business losses, separately stated losses or deductions, non-deductible expenses, and distributions. And again, remember, distributions are the last part of the AAA calculation each year, and they cannot reduce it below 0, though business losses can reduce it below 0. And then finally, tax-exempt income and the expenses related to it do not affect AAA. So that life insurance premium that was at the beginning of the video, potentially that could have been tax-exempt because a lot of times the income from life insurance disbursements is tax-exempt. In the question, it did say it was non-deductible, so we're just going to follow that. But typically, life insurance premiums are tax-exempt, and the expenses associated with them are also not tax-deductible, so they don't affect the AAA. All right, with all that said, that is the end of the video. Thank you so much for watching. If you liked this, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We teach the key ingredients to passing the CPA exam. It's something you don't want to miss. Also, if you liked going through the questions to learn the material, make sure you check out our SuperfastCPA app, where we have our 5-question mini quizzes that you can easily access on your phone all throughout your day to continue learning. Again, if you like this video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.